Hello, can you hear me?
Can you hear me now?
Can hear you.
Can you see me?
Nope,
No?
not yet.
I can see you. I can hear you. I
Hi,
can hear
Matt.
Ashley.
There we go. There we go.
I can hear and see Ashley. I can see everybody. We're good.
Gotcha, boys. We're all up.
You see that little? You see that little? That little drawing behind my jacket on the couch behind me.
Yeah, works out perfect, boys. Sorry about that. It was I was running a little bit late today. We had a Salesforce call, so we've got 4 new salespeople at Materials Exchange. So we're going through customer visits and working on some things. Visited a nice yard in Evanston, Illinois yesterday.
Nice.
Had a great tour from the owner. Took us all around. It was a great contractor yard. You know what I'm talking about? Where you walk in and it's
Old
nothing
school.
but stuff for contractors. Everything you need to build a house from the frame up to the roof, and just a great venue. So we were really excited about
How's
that.
How's that North Chicagoland business? What's the report from the field? I mean,
Still good. Still seems to be pretty fluid. A lot of jobs are still getting put together.
I mean, that's all heavy, custom remodeling. That's like, a lot of big shacks like over your side of the block there, Ash.
I don't know, Greg. I've been on your side of the block, and I mean, my shack would fit in your garage, I think.
It's only a 3-car garage, 1 car in it. Oh no, we got 2 in there now.
So look, everybody, welcome to This Week in Lumber with Matt Beamer, Hampton USA, Greg Riley, Sitka USA. Great show. So I wanted to give you the introduction. One of the interesting things, I go by this yard every day on the train, and I would say, beginning of this year, there was so much lumber in the yard, and this person's just like what I'm seeing is a lot of different yards around, and this will talk in what we're talking about here. We've been seeing, if you've been on This Week in Lumber with Matt, Greg, and myself for the last 6 months, you've heard us talk about less business, certainly in the last 3 months, if that makes sense. And it's interesting because one of the people here came out and said the other day, surprisingly, hey, my customer called and said his business is down 30%. And I don't think Matt or Greg, did I actually call Greg afterwards? I'm like, are people just starting to realize this now? Because the lumber market itself, which pretty much forecast this before it went up, or before anything else saw it, kind of forecasted it as it was going down too. I mean, it really is kind of the canary in the coal mine, lumber. I'm always amazed at how it is on the front line of kind of showing our economy in a way. Does that make sense, right, Greg and Matt?
No, my whole career, I've told people, hey, the lumber business is kind of a primary indicator of what's coming down the pipe in the overall economy. I don't know why that is, but I mean, I guess if you're just measuring the willingness of a person or a family to go out and invest several $100,000 into something, that might be a good indicator of economic health, right? And that's the business that we're in. We're in the building of that commodity, right? If you look at a house as a commodity.
Ash, what was the inventory? Like you said, you were going by in the first half of the year and it was chock full of lumber. You couldn't fit another stick in the yard. What's it like today?
Certainly quite a lot less.
Okay.
And I mean, I don't know the exact number, but I'm saying it's half of what was in there before. But again, I mean, a lot of these lumber yards built inventory based on what their customers, what they needed. They held inventory for them, right? All across the U.S. They went to their customers and they bought inventory for them and put it on the ground. And, this is one of the reasons there was such a pull of inventory coming from the producers, distributors to the end users. And I see now why, people build a big inventory, because and the price ramp because they were holding inventory for customers for a long term, right? And you're not seeing that right now. So I mean, one thing, Greg, you and I chatted a little bit this morning about what we were going to talk about, you, Matt, and I, and let's kind of talk about the poll you had a couple of weeks ago, the poll you have now. You mentioned Matt Lehman had a poll out, so there's a couple different polls out. What are we gleaning off of those polls? And
well, I'm happy to give tomorrow's show a little bit of a plug. And Matt's poll was basically asking about what people's buying intentions were for going into January. And I pulled it up. If I remember correctly, essentially it was like 60% of the market was not going to build any inventory, and another 35 or 40% was, if they were going to build any inventory, it was going to be a small amount. So, and then my poll had more to do with price than it did with buying intentions. And just looking here, what the final numbers were on that. Stand by. Basically, I asked the question of what people expected. It was interesting. A year ago, 2x4s were $1,100 on their way to the high of the year in February of $1,477. Today we're at $370 on our way where? 38% of the people polled feel that the market's going to go higher by $50 to $100. 25% feel it's going to go higher, but less than $50. And 37% think it's going to go lower. Of that, 11% think it's going to the low 300s. I mean, if we go based on our contrary indicator, the low 300s is probably what's going to happen. But I feel like, the hard part about the polling is how you ask the question and what the choices you give can skew it. But, just based on the history of all my polls, it looks like we're going to the low 300s or less.
Yeah, that's
so there you go, Matt. And I hate, I'm a positive person, and I know you called the bottom of the market last week, and I'm still with you, brother.
Maybe I'm a little early. We'll find out.
That's right. I know. It's really hard this time of year because the market loses so much liquidity. I think there's already a lot of people that are in holiday mode, and Matt, you and I know this. There are years where, like the month of December, it was in Ash. We used to say, you know what, we lost money 8 out of 10 years in December, right? Because it was just a tough month. Prices were usually cheap, but there wasn't a lot of liquidity.
Yeah. No, that's a good point. And I mean, we're this backdrp where everybody's kind of looking at seasonal strength, right? And as we all know, when the seasonal doesn't work, just doesn't work. But I'm not saying it may not. I mean, I certainly see a lot of inquiry on the platform, and the people I talk to on the phone. Here's the people that are buying. If they have it sold, and I see this with multifamily, if they have it sold, I don't see a lot of people out there speculatively purchasing inventory right now. In my opinion, from my little pig farm I deal in, so to speak.
What about you, Matt? What do you see?
I think my old rule of everybody wants to buy lumber at 1,100, nobody wants to buy lumber at 400 is still accurate. I mean, it is December, and I think we're in kind of the dog days of winter. And for example, I've got my 2 daughters are coming back home this weekend for the holidays, and I'm sure I'm not alone. There's probably thousands of people in the lumber business whose kids are coming back home for the holidays, and they've got other plans between now and first week of January that don't involve lumber.
This is our last show of the year, Ash? This is it?
Well,
the wrap? Are we going to wrap this week or what?
That's a good possibility. One thing, I'm having this conversation with a lot of people. Okay, so where is everybody's heads right now on 2023? Greg, I know what your thought is on it. I think your feeling is we've already sold off enough, and 2023 may be more positive than we think. I still see people mentally making the turn from where they're at. So, like, where did we build? What did we build this year at the high water mark? What will we come in annualized this year on housing starts?
We're gonna housing but November housing starts are released on Tuesday morning, and they're projected. The current projection is like basically marginally lower. For this year, we're gonna build. I'm gonna say somewhere in the 1.5, some mid 1.5s, which will be down from 1.6 last year.
Mm-hmm.
And but that reflects building at a 1.65 pace in the first half of the year and a 1.4 pace in the second half of the year. So we were having this discussion about, okay, what are we going to build next year?
Yeah.
And I mean, I think that's therein lies the question. I mean, so lumber is always seeking equilibrium, and inventory accumulation or inventory accumulation and liquidation kind of runs like this on equilibrium, that's seeking equilibrium. I think we can all acknowledge that demand has slowed faster than production at this point in time.
And it generally
does.
It's almost like trying to average down the cost of inventory in a down market.
Whew, that doesn't work. Can't do it. Can't get there.
My thought is this: at 1.6 million housing starts, we probably didn't have enough lumber, right?
Well, we couldn't get enough labor to build more than 1.4. Remember, we were talking about that back in.
That's exactly right, Matt. Or I shouldn't say that. I guess my question is, did we have enough lumber at 1.6, or if we were going higher? The other question is, if we go down to 1.2 next year, for every 100,000 starts you lose, you basically lose 3 billion board feet of lumber. So if we lose 400,000 starts, you're losing 12 billion board feet of lumber, and you lose 1 billion board feet a month, right?
And this is where I've been kind of having to wrestle is, when we were in the second quarter, we were talking about how much housing was going to slow. And we talked about it April, May, June, July. And so to your point, as now here we are is like, now it's like, oh, okay. Yeah. Housing has slowed. I almost feel like people are too negative on what next year is going to be right now. And that's not to say that the first part of the year isn't going to be pretty rough and that there needs to be some capacity restraint in order to get supply and demand in balance.
Well, what's the thing that mills are generally taking off the lion's share of capacity already after the market's bottomed, right?
Correct.
And I mean, that's just going to happen because nobody can ever pick a bottom, right? Just like you have to buy down to average down. And
only way you buy the bottom is buy every day.
Right. Who's gonna buy these houses, right, in the first half of the year? You guys talk about that. Market makeup of the buyers. Is it going to be us, the average family, or somebody just moving from one house to another or moving from one state to another? Yeah, maybe, but it might just be some industrial buyers that come in with, billions of dollars in an open checkbook and go to Horton or Lennar or KB and say, hey, cut me a deal and I'll buy these 500 houses from you, And I think that investor money is sort of sitting on the sidelines, sort of like a snake in the grass, just waiting. They're looking for a discount, and they'll probably get it. But at the same time, in my career, Some of the best deals I've ever made were in December as a buyer.
Good point.
So, I'm not near as negative on the first quarter as maybe some people are. I think there's a lot of, first of all, when I asked the mill group at Hampton, hey, do we have a lot of inventory compared to 6 months ago at our sawmills? The answer is no. We have not built inventory at Hampton. So, do you think we're alone? Do you think that we're the only mill that's smart enough to figure out how to keep moving our production? No, we're not.
Right. Well, and I think that's one of the things that's driven prices as low as they are. Is all mills have been very highly focused on selling and shipping all of their dressed inventory,
Right.
and having,
It's a good
we
point.
may have there may be the lowest dressed inventory at mills.
I mean, there's deals to be had right now, but what happens when the tide turns and the investors come in with their open checkbooks and say, "Hey, I want to buy 100 cars of that," and put in a floor. And it's no different than the housing problem. So if there's some housing cancellations or somebody wants to finish a subdivision, they have no liquidity with the general public, but they can go to BlackRock and say, "Hey, we'll cut you a deal. Buy these 200 units from us."
Yeah.
I think things are going to happen here in the next 6 months that are going to catch people off guard. Usually what happens, and this is where I go back to my measure of sort of complacency, when we all get really comfortable owning $1,300 lumber, like it's no big deal and we've been doing this our whole career, and that we're just going to wake up every day and make more money because the market's great, blah, 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 like what happened, the miracle of the last 2 years. And then now flip the switch. We're all complacent with low inventory. Well, our customers don't care. The traders don't care. I mean, they're winding down another good year of trading. The builders don't seem to care all that much. I mean, the entire industry is just satisfied with carrying low inventory right now, including the sawmills. So that complacency sparks change is what is, in my opinion. So when we were all sitting around thinking that we're going to never have $300 lumber again or $400 lumber again back in April last year, well, here we are. It's December. It's 8 months later, and we have $400 lumber.
Yeah. No. And one thing I was reminded of today by Greg too is like rates are starting to go the right direction again, right? And I think we always focus on how bad they were. So let's look at both sides of rates.
Yeah, I mean, mortgage rates peaked at like 7.5% a month or two ago. They're down to 6.5%, and may very well. I wouldn't be surprised if in the first quarter mortgage rates are back in the fives. And if you look back historically,
built a lot of houses at fives. Yeah,
I mean,
yeah.
If you take out the last few years, 5% mortgage was a great mortgage. One thing that is going to affect us, Matt, though, is when you think of all of the people in the last 2 or 3 years that either bought a new house or refinanced at 2 3/4, 3%. Here's where it really has an impact. Those people are going to be less likely to say, "Hey, I'm going to sell my house that I have a 2 3/4 mortgage on, go buy another house and have a 5 or 6% mortgage." But what they are going to do is going to go, "Hey, let's put that addition on. Hey, let's redo this." I think that one of the bright spots next year is going to be repair and remodeling, and will be a bigger percentage of the market.
Yeah, I agree with that. We're looking at doing that because it's like, all right, you can't go out and get either that or these high beta areas. Like we were talking about Austin. Look at the rent versus the own versus the mortgage payment versus the rent payment. Rents are very low relative to the payment now. Something has to give in these high beta markets, right? Is that the right term? Beta?
What is in Austin? What does it cost to rent? I mean, versus buy.
I don't know.
I don't know any of that.
I'm just throwing that out because I read it.
I know home values in Austin are inflated compared to say Houston.
The home values are really high, and the multifamily business is continues to boom down there.
Yeah, sure. No doubt about that. So somebody Jason put a note up here. Jason Gregory said he can already buy in the low threes on number 2 already. Where's number 2 trading at right now, gents? On the Matt, you've got the best call on the west
I mean,
side.
our last bit of business is in the 370, 380 range FOB mill, and that was as of yesterday. So I don't know.
The relative price. I mean, the weakest segment of the market is the European lumber market. That's that's trading in markets. I did some back of the envelope work, and there's stuff trading in the low 300s equivalent. Up and down the East Coast.
Matt and I ran into it this week, hearing how low 2x4 12s traded, right?
I know.
And
somebody dumped them. I'm like, wow, that's interesting.
I mean, when we saw that, but I mean, and then I was on Twitter or LinkedIn, and one of the European guys said, "Well, they're running out of logs over there." Is that true, or is that?
I don't think so.
Yeah, no, yeah. Well, this says logs are really expensive, and I went, well, then that's not going to be good, because it's hard to turn expensive logs and cheap lumber into a profit.
Yeah.
You know what's weird is I asked the question today in our little morning sales meeting, like, what are log prices in the Pacific Northwest doing? And I was shocked at the answer. The answer was they're going up. I'm like, really? So the price of finished lumber's down at, multi-year lows. Like, you could buy green Doug fir 2x4 standard better, sub $300 mill. And the log price is like $950, $1,000 Scribner for Doug fir logs. It's crazy. By the way, that math, it doesn't work on any planet that you can imagine, people.
Right on.
Trust
me. Why is that? Maybe Russ, why is the Pacific Northwest price so high right now on logs?
So, I mean, Matt, I guess that's my question is if we look at, we know that Western Canadian prices here, in the 300s, is a big loser based on what we've been reported as the cost, and the current levels of production are probably unsustainable at these prices. What does that mean for like Pacific Northwest on average? Hem fir, Doug fir, are these current prices levels that are going to really cause people to take a look and go, well, we can't make as much lumber at these prices, and then we're going to rationalize? Or
you'll see that
coming down the pipe.
Yeah, I mean, the mills have like a war chest of cash that they've generated the last 2 years, so they can make some decisions that are a little bit different than they would have in the past. One of those decisions would be to pay your employees not to work, because you don't want to have to go out and try to find new employees in 60 days, right? So if you decided to take some targeted shutdown at a sawmill, maybe you shut your mill for a month and you just pay your employees to have a 1-month vacation. That's something that could happen. Like what I'm seeing in the Northwest right now is almost every mill in Oregon that I deal with is taking extended Christmas shutdowns. Like there's one mill that I buy a lot of lumber from that's down for 3 full weeks. That's unprecedented. They've never done that at all 3 of their sawmills. They're talking 700 million board feet annualized production between those 3 sawmills, not running for almost a month during the holidays. They're going to be gone this Friday, and they won't come back until January 9th. And I don't remember ever that hasn't happened in my lifetime. That's unusual. So I think you're going to lose a lot of production due to Christmas extended time off, and like an attaboy here. Thanks for your great work. You guys really busted butts this last 2 years, and here's your reward. They're going to get a 2 or 3 week paid vacation, and they've earned it, right? I mean, absolutely. The millwrights and the sawyers and the forklift operators, these are the guys doing the hard work. I mean, you and I, we get to sit in a nice, dry, clean office and make phone calls and send emails, but these people are actually doing the real work. So they're going to get a reward, and there's going to be a lot less production when we come back. Let's say I just decide to take the next 2.5 weeks off and come back on January 2nd. There won't be that much lumber laying around for me to call and buy, right? So I wonder what the effect of that will be on people's plans for January, February, March. I really don't know the answer. I can guess,
It's a good point.
but
Is Bob just asked Matt, will those mills be shipping from inventory during that time frame? And I think you kind of answered it. It's like, yeah, but it'll be a limited pile. We've been looking for 2x6, 116, and 5/8 Doug for a week, and nobody has it. So there's some items that are hard to find.
yeah, there's always going to be items that are hard to find. And, but, if you shut a mill down for 3 weeks or 2 weeks, and then come back in the new year like all gung ho, ready to start trading again. Well, there might not be as much enthusiasm on the other end of that phone call. Does that make sense? Because they don't have their boss breathing down their neck, hey, get rid of this because we're going into year end. They were not going to have that. That won't be part of the script. So it'll be interesting to see.
I think that, Matt, you know what? I'm still giving your market bottom call a real shot. I think
who knows, man.
I love that you stepped out. I love that you stepped out and did that. And I'm cheering. I'm cheering for it.
You guys saw.
And I think you've got a good point. The one thing is that we know about this business is that when there's a general overall sense that everybody's in that same mindset, is something changes and something's different. That's for sure.
Well, I'm curious. Here's a good Jason Gregory is asking our questions and making comments here. Why don't you read through that and talk to Greg about it? Because Greg and you and myself, to a smaller degree, are well aware of Euro and what happens. What they're doing with it right now, and how it's moving from the ports to the interior of the country.
Yeah, so to finish his thing, it says keep moving out of the ports or keep incurring more costs sitting on it. From the Euro mills I've seen, they're keeping it moving, right? And they're selling it, which you kind of want to, because you don't want wood sitting on a port for very long. I can't speak for both of you, but as Greg, that it costs a lot to sit at a port, and you want to get it moved, right?
Yeah, and I think that's.
You're an expert on this. You move a lot of Euro and you have vessels behind it all the time.
This is going to be the question. I think, the prices that we're seeing out in the marketplace today, and that we're probably going to see in the early part of January, are going to slow the amount of Euro that's going to come in behind it. These are unsustainable prices also. And, you can say, well, there's nothing they can do with it. Well, they're going to rationalize production also. When these kind of prices come back, to Matt's point, these mills have made a lot of money also. And, I loved your ideas going, hey, why don't we just pay people not to work? It's like the mills could become like the government.
So, interesting. I had a guy just texted me that he's watching it. He said he didn't want to post this, but he said he spoke with a large national home builder this week in certain markets in the Midwest. Non-refundable deposit to lending institutions of a large amount of money will go to sales with buyers with credit scores of 720 or higher. Bank will lock in a rate of 4.99 and a 30-year fix for customers. So basically, some home builders are going to the point where they're trying to buy down the mortgage, right?
Sure. That's typical. That's typical when sales get slow. You start out by giving away a free refrigerator, and then you end up buying down the mortgage.
But hey, did you guys hear the big news this week? Did you hear it?
No.
Big news.
I'm actually shocked because it's big news. It's December and it's going to be cold. Did you hear that?
Winter's coming. Yeah, winter's coming. Yeah,
crazy. Right. I've seen things on social media about how it's winter and it's going to be cold out.
Is it going to snow? Is it going to snow?
I'm like, it's cold. It's December. I don't know how to deal with that. And so it's like, now with that said, it looks like we're going to have some temperatures drop down to the teens all the way south into Georgia, Florida, and those areas, which has happened before in the past. It's December, but will that have any effect, or that'll maybe have an effect on some? If it gets down to 10 degrees, there probably isn't going to be as much building down in the south.
Yeah,
There's
Probably not.
always things are affecting buildings someplace. You know,
Yeah.
some places it's flooding, some places it's cold, it's snowing. You know, I mean that's a
And
good
look, I'm
concept.
not. I know it's dangerous and all that, but I'm almost to the point now where I see these news flashes and I get hooked on this headline about something. I read it and I'm like all worried about something. Then I read it's like, oh, it's going to be cold out. Okay,
Yeah.
Well,
yeah,
you know, then going back, you know, Matt, you know, your point about your mills inventories, which makes perfect sense because shipping has been very good the last several months. The railroads have been operating at a relatively high level, and
Yeah.
you know, I feel like, you know, mills have taken advantage of that and said, "Hey, let's reduce our dressed inventory so when, you know, when winter does come and we can't ship at this great level, we'll be in a good position."
Yeah, I mean, I think it's just fiscal responsibility, right? I mean, you're in the business, Hampton or Weyerhaeuser or Canfor, Toco, Fraser. We're all in the same business. We make a product that needs to be sold and turned into cash, right? We literally are producing something that gets loaded on a choo-choo train and sent off into the ether, and then somebody sends us a $60,000 check. And that's our
Well, maybe
that's
only 40 now.
that's our sole function, right? I mean, our function is take our inventory, turn it into cash. Take our inventory, turn it into cash. Repeat, repeat, repeat over and over and over again. And I think that the flow of material and as Greg was alluding to, the transportation has been good enough for us to continue to do that. And even though the market has slowed down and prices have come off back from all-time highs to more historical norms, we're just doing business the way we've always done business. There's nothing new. We didn't invent anything new here. What we had was a 2.5 year bubble. And now we're not in that bubble anymore. And we're just back to, brass tacks and the old
Matt,
fashioned get on the
it's
phone, make
Matt,
people pay attention and, do some deals and make some lumber go away.
it's
Well,
interesting.
like right now in December, how do you make lumber go away when half the audience is not even paying attention?
Yeah. Yeah, well, I had a conversation with an OSB mill this morning, and we were looking at the prices, and he goes, "Last time we were at these numbers was May 2020." So think about it. We're like what you just said about what we went through the last 2 years. We're back to and I hate the term pre-pandemic, but that's what the numbers we're at. We're at pre-pandemic numbers right now in many cases.
Yeah, and I don't think there's some miracle coming our way. I don't think we're going back to $1,400 lumber.
Yeah.
But as you saw when Weyerhaeuser's employees went on strike for a month and a half, there are things that we don't have control over that can cause a $200, $300, $400 price adjustment upward. And when you constrict supply, which is what happened when Weyerhaeuser's employees decided to strike, and then all the logging stopped at the same time too, because Weyerhaeuser is one of the largest log suppliers in the world. That put a real kink in people's plans on Doug fir, green and dry, for 60 days. Now, what happens when the CN sends us an email in January saying that we got 400 cars frozen to some railroad tracks up in Ontario, and by the way, we're way slower, we're putting everybody on embargo. Well, it already takes me 5 weeks to get lumber from Prince George down to Texas.
Yeah, good point.
So, I mean, the time to right size your inventory was August, September, October. Now that we're in November, December, January, I don't want to just blow out my inventory at multi-year lows, knowing that the railroad is going to screw it up again. This will be year 7 in a row now. So I don't know. I'm more inclined to be patient and just see what happens in the first quarter. And if I'm wrong, it'll cost me some money and I'll move on. But it's kind of silly to be overreactive around Christmas time on the negative side, in my opinion.
Yeah, no doubt. Well, listen, guys, I mean, I really appreciate your time. We're up against it here. We'll figure out if this is the last show of the year or not. I'm going to be in Denver tomorrow, visiting some customers, and depending how cold it is, maybe being on a machine with 1,000cc motor on it, cruising through the woods. But yeah, looking forward to it. Haven't done that in a long
That-
time. But
I've only done once, and it scared the bejesus out of me, but it was fun.
that's fun. So listen, Matt, Greg, thank you for doing This Week in Lumber. And again, Matt Beamer, Hampton Lumber Sales, Greg Riley, Sitka USA. Ashley, you can come to mxlbr.com. Have over 500 items up listed right now to sell and buy. So please come and join us, register, and we're looking forward to talking to you on our show tomorrow.
Matt,
Thank
enjoy the holidays with your family coming back.
Yeah.
Wish you a Merry Christmas, a Happy Holidays to all of you, to everyone out there, and we'll look forward to seeing you and seeing everybody in 2023.
Yeah,
Thanks, Greg.
thanks everyone. I really appreciate it. Thank you.
Yep, you bet.
Cheers, guys.
Bye-bye.